Well, the grain market is starting out just a little bit weaker here this morning, and we come off of an overnight trade that was weaker, even though we did have a couple of export sales. Let's take a real quick look at those export sales that we had on the overnight trade, and it was both corn and soybeans. We had 464,000 tons that went to Mexico, and then for the soybeans, 132,000 tons went to China. So what did that do for our grain market this morning? Well, let's find out as we get analysis here this morning with Chris Swift with Swift Trading. And Chris, well, what do you think? We had a little bit of export news here this morning. Grain market's still a little bit weak here. Is this just related to harvest pressure?
Well, I believe so. And although the rains that we got over the weekend will clearly dampen it just a little bit, we have seen excellent yields in the southeast so far, and the combines are flat rolling now.
Yeah, and those will continue this week. Will that continue to put pressure on this grain market?
It should. The rain is probably going to be out of here over the next 3 or 4 days. It won't take long to dry back out again, and by this weekend, you will have a greater opportunity to have more grains harvested.
We've got a world supply and demand estimate now ahead of us with all of the small grains and the report that we had last Friday in the rearview mirror. Obviously, some of that was a little bit of a surprise to the market.
It was, especially to the wheat market. The wheat market took the brunt of the blow to it, and a lot of that was the Minneapolis spring wheat. It came back and showed a little bit better maturity than what we had before, and we thought some of the losses due to the drought would be more extreme than what they are, but it came back a little bit, and of course it took the brunt of the blow on Friday's lower trade.
All right. Well, what are your expectations, or what are you hearing from the traders then in expectations of this next world supply and demand? Because we're going to have more surveys. We're also going to factor in the abandoned acres. So this could be a little bit more of a volatile report.
It generally does, because you do have some of the crop already harvested by October, and it will have some, but unfortunately it looks like we are going to have another good-sized crop, even with the reduction in acres that we had for corn this year and some of the abandoned acres due to early flooding that we came into this year. But it still looks like we're going to have ample plenty corn and beans this year so far.
Chris, what about working through last year's surplus? We know that we had a big crop last year. We still have some that we've still got to kind of work through now to be able to get past that point of where we've always got the big crop haunting us.
Right.
Do you think we're getting closer to that?
It's closer to it. Price dictates a lot of things, and what we haven't seen is a price rally enough to move those prices up where it gets some movement to it. The export sales have been relatively robust, but you need the farmers to get rid of that grain that they've still got on hand from last year, and in some cases the year prior to that. So we need a little bit of an upswing in the market to move some inventory without damaging the price too awful bad.
What's the impetus that's going to get us to that point? It must be hidden in maybe this next report, because so far the harvest results that we've gotten in are okay in some cases, and I realize it's still early in harvest. But so far, it's looking like we still could have a pretty good-sized crop this year.
It does. We still need to be able to export tremendous amounts of tonnage out across the world. Our livestock production continues to be elevated, as well as does ethanol. So we are consuming those grains at a relatively rapid pace, but unfortunately, due to the low prices throughout the last several years, we haven't had a great deal of farmer selling to move a lot of that older grain through the pipeline.
All of this is going to also depend on the dollar.
That's correct.
And the dollar now starting to come back off of
It's firming just a little bit. We saw the euro currency take a little bit of dive. It is the biggest percentage of the U.S. dollar index, and it started to fade just a little bit last week and give the dollar a little bit of strength.
All right. Well, let's check the livestock market next. Folks, be sure and stay tuned. We're going to get to that right after this here on the Market Day Report. Stay with us. The dollar up just a little bit over 300 points here getting through this morning, and just a little bit ago we were talking about how this dollar is starting to firm. Let's look at these live cattle, feeder cattle, and hog futures numbers before we get back to our analysis of today's trade. And we're going to have to call this mixed right now at this point in time. October live cattle down 2, 108.70. Those December fats are down 20 at 115.05, but the February unchanged at 118.62. Over to the feeder cattle market right now. It's October feeders up 29 at 152.52, finding a little bit of firm ground here. November feeders trading at 153.88. That's down 12. For the hog market, we're keeping a sharp eye on this one. October up $1.90, 57.30. December hogs up $1.55 at 61.50. And Chris is here with us to talk more about this. Chris Swift with Swift Trading Company. That hog number there, this is a little bit surprising to you, maybe?
Really not. They have started to narrow that basis down pretty close to even. I think there's about a $3 or $4 spread to the index this morning. So with the index trying to find a bottom down in there and knowing that fourth quarter hog production will probably be our greatest, we've already started noting that probably in the first quarter and second quarter of next year, they'll begin to taper off that hog production. So maybe we've already seen some elevation in the back month prices away from the index. Spot month going to continue to follow right with the index, but now that they're less than a $4 spread and into expiration here in October, they'll narrow that down pretty quickly.
But can the futures outrun the cash?
Not by a great extent. The cash market is still going to be burdened with inventory all through the first quarter and fourth quarter and into the first quarter of next year.
And part of that burden is, of course, what's going on in the cutouts. And this is obviously the beginning of the pork month,
that's true,
so to speak. But goodness, we're going to have to continue to keep this consumption up to be able to absorb all that, right?
Absolutely, and lower prices does help that. We've noticed that in the grocery store, retail prices have remained low, so the consumer has lots of choices with their protein products. And now we start into kind of another beef eating season with the ribs coming up, and we started noticing that the lower box prices has begun to attract the retailer as well. So everybody likes to be able to feature the lesser priced meats in the grocery store, and that tends to bring the consumer in and consume more.
And there's going to have to be a balance, excuse me, between that pork and that beef consumption.
That's true. That is very true.
They play with each other.
Absolutely. The price differences between the two makes a great big difference in the movement of each one of those and how they're featured in the retail grocery stores.
You and I were talking out in the hallway a little bit about this milk market here, just a little bit. Come through some tough times here recently.
Absolutely, and we noticed that some information that came across my desk last week was that the cow herd, the dairy cow herd, had begun to level off, and they had actually increased the cow kill slightly. So we think that maybe beef prices, the milk prices won't be under as much duress as what they have been previously this year. We were trading around $16, $17 a pound for it, so I think that we'll still be able to hold in those levels for a while. And if we begin to get a little adverse weather or the cows stop their milk production by a little bit, we could see back up into the $17, $18 range again.
Okay. Well, I know that November contract this morning still in the mid to upper 16s.
Correct.
At that point. Is that our next front month then? Because we're into October.
Yes, that is correct. Yes.
All right.
November will be the next spot.
Very good. Chris Swift here with us with Swift Trading. Always good to talk to you.
Thank you,
Great
John.
information. Thanks a lot for being here in the studio
sir.
with us.
Appreciate it.
All right. Thank you very much. And we're going to continue to watch these markets as they go on out through the day here, Janet, and see what happens.
All right. Well, thank you, gentlemen, both very much. Appreciate it.
Thank you.